The world is becoming warmer, and experts are warning that if no concrete measures are taken, the temperatures are likely to rise to about 2 degrees Celsius by the year 2035. Now, the situation will be worse back then because more rivers would dry and more people will be hungry. And so on this show, we shall be looking at what options do we have to avert that catastrophic temperatures. We'll be engaging with the young people from around Africa to know what exactly their countries are doing to help in climate change mitigation. Also on this platform, we shall be looking at the issue of impulse borrowing, and that is becoming a major crisis because we are seeing a situation whereby young people are getting into borrowing. No wonder the ratio of non-performing loans has ballooned to about 14%, and the Central Bank of Kenya is in a rush to try and deal with this situation. So what is the way forward? This is BizCheck. We are live from Broadcasting House. My name is O'Brien Kimani, and we have our reporters around the country, and of course we're also tracking the aftermath of yesterday's widespread protest. There is a planned tour on the Nairobi Expressway to try and assess the damage that was caused by marauding mobsters that attacked the critical infrastructure at that expressway. And so we are tracking what's happening even in your counties, and so that is what we are doing here on this show. I told you my name is O'Brien, but for this hour we just want to focus on the issue of impulse buying. We are in the company of Peter Macharia. He's the CEO of Jijenge Credit. He has been here before and is going to help us and guide us in this conversation. Thank you very much indeed, Macharia, for your time this morning. And next to Macharia, we have Anastacia Kariuki. She's the CEO of Springboard Capital. Thank you very much indeed, Kariuki, for your time. So I basically want to start with you. Can you help us understand, first of all, what is impulse borrowing?
Thank you very much, O'Brien. We are eager to speak about this because we must ensure that lending happens in an organized way. Mm-hmm. Impulse borrowing is where you see an opportunity and you identify a need, and very quickly you go to a lender and you want to be given funding for your need without looking through the requirements and the needs and any other options that you may have. So it's quick borrowing and quick access of money. Mm-hmm. Yes.
It seems like it borrows the same concept with the impulse expenditure, whereby you just spend without a plan, without budgeting. How bad is this?
Well, it is bad because borrowing puts you in a situation where you must start to count how you will pay. Anything borrowed must be paid. And so if you have borrowed without thinking through the whole process and the requirements and the costs and the things that we shall be delving into in this conversation, then it becomes bad. Again, we are experiencing access to quick money. The quick money may not be as easy as it might look, but it is quick. And so because there is availability of the quick money, we're finding that many people want to quickly be able to access this money. Yes.
Mm-hmm. Peter Macharia, you're in this business of lending. You've been here since 2014, yes, and so that's quite a long time. And along the process, you have ramped up, tremendous amount of experience. Have you seen cases of impulse borrowing going up?
Definitely, yes. Impulse borrowing is closely related to what we also call impulse buying. It's the action of engaging in borrowing without any plan, without any budget, without any vision on how you're going to take the money. And it is a very big challenge because you end up making the wrong decision, and when it comes to payback time, you go through very turbulent times.
Mm-hmm.
Yes.
What leads to impulse borrowing?
Well, impulse borrowing can be usually it's motivated by friends, peers, offers to engage in quick or maybe cheap purchases. And at times it might be, as long as you're borrowing and there's some cost implication on the funds that you've acquired, it might not look cheap. On the flip side, fine, the goods or the item you're buying could be cheap, but as long as there's an interest factor in it, if you add it up, it becomes expensive, and therefore it calls for a lot of personal financial discipline, a lot of research, consultation, and doing something we call in the academic world a SWOT analysis. Do you really need to purchase or to incur that cost at that particular time? Mm-hmm. Yes.
And I like the fact that you are bringing in the issue of financial discipline, and a lot of impulse, borrowing emanates from lack of proper financial discipline. So how do you inculcate a culture of financial discipline, personally or individually and at a business level?
All right. For you to be able to ensure that you have financial discipline, one is you need to be aware of all your costs. You need to be aware of all your processes. You need to be aware of your income and what it can do. It's very important that you also work with people, financial advisors, who can be able to take you through your plans and your cycle in the business and what it is that you require at any one time. That would be able to help you to forecast your needs. Needs are very important because they will enable you either run your business or run your life. And so working with that and a budget in place is going to help you to stick to that budget. And so even when your budget requires for you to borrow, it will not be impulsive. It will be pre-calculated, it will be seen, it will be calculated, and you will know how much is required. And so you're able to now begin to explore, what are my options? What are the costs associated with this? What period of time are we looking at? So that discipline, once inculcated, is able to help you plan your finances better.
Have you ever, found yourself in this situation whereby, you're just getting into impulsive borrowing, or do you know anybody who ever got into that?
Absolutely. It would be difficult for you to say, he who has not sinned raise the first stone, So we have all been in that situation, and sometimes we justify it by that there is an opportunity that has come up, and this opportunity is great. It is a good opportunity. It looks good, but it requires financing that we don't have. So the most important thing is to take a break, because is to take a breather and see, is a good opportunity, because we don't want to say that there are no situations that will come up that will require you to look for financing very quickly. So we've been there. We've also seen customers coming in, and the best thing is when you're working with an institution or with a financial advisor who helps you take some break and say, wait a minute, what are you seeing? What is this opportunity? What is it likely to bring out? What are we likely to spend? And then we start looking at the options. Yes.
Peter, I mean, in a world, and we are living in a world where, technology has allowed, commercial banks, mobile phone companies, micro lenders, just to pamper you in your phone, through your phone, through emails or anything else. I mean, to pamper you with messages that are just encouraging you to borrow and just borrow to buy a new phone, borrow to, to buy the most expensive shoes. I mean, so how do you ensure that despite all these, pressure for you to borrow, I mean, you stay within the disciplined lane?
Well, it's very simple, although it calls for a lot of financial literacy. And that's why I've been one of the advocates of insisting that financial literacy should start from the lower primary school, all through to even the tertiary colleges, university, and professional colleges. Because you find someone is an engineer, but who unto him, he only knows how to repair engines. But in terms of the financial or business part, they don't have that financial knowledge or discipline or management. Therefore, my proposal has always been, let's train as many people on basic business skills, basic financial skills, so that we can ensure that the society has people who know what it means to handle money and how do you invest, what time do you borrow, because borrowed funds are supposed to be invested on something that will generate income or something that will appreciate in value, as opposed to impulse buying, whereby you borrow. I've seen people who borrow and go for a holiday. You really need to do a lot of pros and cons before you invest in such a
Is that a bad idea? I mean, for me to borrow to go for a holiday, or to borrow to stage, once in a lifetime kind of a wedding?
Well, it's not always advisable, because you see, it's like a sinking fund. Once you borrow and you invest in a huge wedding, or you go to Mombasa or whichever place, those are funds that will not generate any income. But partly you can look at it as a way of giving thanks to your body. Maybe after years of hard work.
Kujishukuru.
Diwende sherehe sasa.
Anastacia, I mean, I've seen a situation whereby, a lot of young people, and Peter has talked about these, if you're borrowing to go on a holiday, once in a lifetime kind of a holiday, maybe you just want to have you go to Mombasa, you go to Diani, you want to go to Kisumu for a holiday, you want to go to Dubai. Some people are also getting involved, and especially the young people, they are borrowing to do a grand wedding, whereby it becomes the talk of town, for months to come. Would you say this is a good idea, honestly?
When it comes to borrowing, purpose, the minute you identify your purpose, and we keep saying that purpose is very innate, it is actually about an individual, and describing whether this purpose was sufficient to borrow or the other is very difficult to separate. Identify your purpose, and we keep saying that purpose is very innate. It is actually about an individual, and describing whether this purpose was sufficient to borrow or the other is very difficult to separate from one individual to another. But once you are able to outline your purpose, this is my purpose, this is what I would want to achieve. I think when you start writing it down, what you want to achieve. For example, if it is that wedding, if you're borrowing for it and you start saying, what do I want to achieve? At some point you might find yourself striking off some of these needs out of it, because you're now defining, what do I want to borrow? Why do I want to borrow it? The second thing you must also look at, even as you analyze, if it's this holiday we are talking about, is what are my repayment options? What am I going to use as repayment? And this income, and like Mr. Macharia has said, if it is not coming from this particular purpose that I am borrowing, whatever I am currently doing, is it sufficient to sustain a whole 12 months of a repayment for something that I have utilized in less than a week? Because remember, repayments have emotions attached to it. When you repay something, you're happy to repay because of what you gained. So when you start putting down your purpose, it is going on holiday. How will I feel about this holiday 3 months from now when it is still denting my income? So when you ask yourself certain questions, then you will be able to say, do I need to borrow for this, or do I need to slowly save for it? So that you will separate peer pressure to an actual need.
Very well. Peter, because I know you engage in a lot of KYC, or know your customer, at the lending level. What measures do you put in place to ensure that you are lending to the right people? And apart from lending, you are lending to the people to do the right things.
The first thing we do is you fill in an application form. And in that application form, there is purpose for borrowing. And that purpose, we actually look at it critically because there are some reasons for borrowing that we outrightly decline. Number one,
really?
Yes.
For example?
Number one, if you cannot borrow you cannot borrow for betting. That one we decline.
It's a no.
It's a no. You cannot borrow to go and do a criminal activity. And equally, you cannot borrow for some anything that is listed in law, that is, or rather, anything that is seen in the society that is not adding value. Issues like betting, the sport betting activities, and all those other issues.
Would you lend me to go for a holiday?
Yes, that one we actually have a product for holiday loans, but still that one we look at even the costs, and basically we look backwards and see how is your financial ability, how will you be able to pay it, what are you capable, do you have the capacity to pay, and are you financially stable? Because ideally you cannot, if the holiday is costing you 1 million, you can't borrow 1 million, maybe 200,000 or 150 or 100,000 just to top up whatever you already contributed. So those are the things that we look at, and our relationship managers sit you down, take you through, and enlighten you on the consequences of the borrowing, the challenges in case you find any challenges in repayment. How do you go about it? How can it be restructured? And finally, what are the consequences if you fail to pay? The security you've offered, what will happen to it? So those are the things that we make sure that our customers are well informed, well enlightened, and well advised on how to navigate through that borrowing.
And Anastacia, I mean, these days when you go to supermarkets or hypermarts, you're planning to, let's say you're planning to buy a washing machine or a dishwasher, for example, and probably maybe your budget was about 50,000 shillings, and then you go to the supermarket or to the hypermarket, and you see they have partnered with some lending institutions whereby they can even lend you that item, and then you pay pole, as they are saying, and after looking at what they are offering, you decide, well, I wanted to buy a 50,000 shillings dishwasher, but I can do better with 100,000 worth of dishwasher. Would that qualify to be impulse buying? I mean, impulse borrowing?
When we were growing up, we used to wear bands that would be written, "What would Jesus do?" So for everything you needed to look at, you would ask yourself, is this making sense? And I think we need financial literacy bands for all our people, so that we walk around, and before you want to buy something, you ask yourself, does it make financial sense? In this sense, the reason we have all these things coming through to us is because of development. It gives us access to things that many years we could not access. Dishwashers, we could never know that we would be able to afford them, but now they are coming to us. But everything that comes is not for everybody, and so everyone must always ask themselves, is it for me now? Am I buying it because I need it, or because I have seen it? And does it align with my budget? Does it align with my plan? If for every purchase we can all ask ourselves that, and truly if it does, then borrow. And we always ensure that our customers, we are speaking to them in that line. First, do you need it? Second, do you need it now? Third, is this the best option that you can get? Because sometimes when you calculate the cost of these installment payments vis-a-vis you, buying it one-off, it becomes a little more expensive. So do I need it? Do I need the loan now? And if I don't get it now, will it be more expensive in future? And I'll qualify that because sometimes there's this long age discussion of, do I buy the land now or do I wait for it? By all means, if you start saving for it now, by the time you accumulate sufficient for you to buy, then it means it will be more expensive. So in that case, you're qualified to take a loan and access what you need at that point. Yes.
And in this generation of you live only once, a slogan, the so-called YOLO. So how then do you convince somebody that, look here, I mean, you don't need this high-end phone. You can do well with just a small phone. Even as you wait for your life to improve or for your finances to improve, for you to acquire a bigger and a better phone. Macharia, I mean, how do you counsel people on this?
Well, it calls for a lot of improved parenting, improved motivational talks and counseling and guidance, because the Generation Z, that one for Yola, you only live once. They've got that. Actually, if you look at their saving culture, it's almost zero. That is the latest statistics. They don't save. They want to show off with those big phones, big cars. Actually, they want overnight riches. So it's a culture, it's a societal problem that needs to be addressed and addressed urgently. And I'm happy the government is also trying to change the system, the academic system, from 844 to CBC. CBC is more practical as opposed to the other academic system, whereby if you look at the CBC generation, it's more of what can you do with your hands. So for example, like what my sister here was talking about, the washing machine. The question of, do you need it now? Can you, is that equipment really necessary? Because you just need to create time and do washing with your own hands, as opposed to buying an equipment, incurring a cost, and not only a cost but a debt. So those are the things that the society needs to gradually engage the youth on and talk them out, tell them that like now when the cost of fuel is high, you don't necessarily need to fuel, you can walk. Walking is healthy, it will help you improve in so many areas. So my request is that we need to have a concerted effort, like now what you're doing. This program is very beneficial to the listeners. Then we bring on board the religious group and maybe the academic world, and definitely by the end of the day the product will be excellent. Yes.
I know you're also into the financial literacy training as an organization.
Yes.
When you are doing, or when you are carrying out financial literacy training, what do you tell people about borrowing?
Actually, that financial training, that it's actually free consultancy. We primarily do it to mainly the customers who have borrowed. And because most of the customers who have borrowed from us are business people, we encourage them to attend those trainings so that they're able to manage their business properly, and in turn they'll be able to pay our loans back with ease. Therefore, it really helps, because you find most of the business people don't have that financial literacy. They only happen to get some cash, or they got interested in a certain business, they ventured into it. They don't even have mentors. They don't have people who can guide them through. And therefore, when the business grows or when the business is growing, it develops so many issues in terms of management, and most of them are in the dark. And that's now when we come in and try to enable them to be able to be to pay off their loans easily and to be better managers of their businesses.
Anastacia, when we were growing up during commerce classes, we are more prone to impulse buying. I don't know whether the statistics have changed, but is it the case for impulse borrowing? Is it that who is more vulnerable, or who is more prone to impulse borrowing between men and women?
It's interesting because the things that women were known to impulse buy do not reach the capacity to borrow for them. And so when it comes to impulse borrowing, we find that in the, from what we've been able to see is that it cuts across. It actually cuts across because remember, borrowing is about an opportunity. Here is a deal. Here is an opportunity. You don't want to lose it. And for this opportunity, you need this amount of money. So we find that it's cutting across and people are getting opportunities, and very quickly you want to borrow money to be able to meet that opportunity without thinking through. So it cuts across currently. Yes.
And what about in terms of demographics? I mean, who is more likely to engage in impulse borrowing? Is it the young people? And when I'm talking about young people, I'm talking about people who are below the age of 40, or is it for adults? I mean, not adults, but people who are well advanced in age, and I'm talking about 45 and above.
I hear you. From what we have been able to see, as people advance in age, as they advance in their businesses and in their roles, they stop minding a lot about what they can quickly get. They become a little stable. So towards 45 plus, there is more intentional borrowing that is geared towards certain projects. But towards the young people, because it is at this point that my colleague was saying that, it is about impressing people, it's about I must have it and have it now, it is about YOLO, and so that age you find that the borrowing is coming up a little bit more. And so as an institution, we are keen to actually keep speaking to this particular group, because again, they're the ones coming up, they're very innovative, and so the innovative ideas coming through are brilliant and they're great. And so to fund and to support such ideas, sometimes you find there's impulse borrowing, and so it is the responsibility of the lender. Any prudent lender will halt a break and help this person go through what is it that you're saying, what is the plan, what are you seeing, what are the risks associated with this project you want to embark.
And Wachira, so what is driving this impulse borrowing? Is it the number of micro lenders, mobile phone lenders, or it's just a generation that is fond of doing impulse borrowing?
It's both the generation and the product marketers. Because if you've ever visited the malls, the display of most of these products is very well done, even the packaging. Product marketers. Because if you've ever visited the malls, the display of most of these products is very well done, even the packaging. It will attract any person, even an adult. You feel attracted and wish to have or belong to that kind of category of owners of such kind of phones or clothes or name it. Most of the packaging is very well, the displays are very
it's supposed
automated.
To tempt you.
Yes, it's sophisticated so that they tempt you to, even the lighting, it's well done in such a way that you definitely wish to have that TV in your sitting room or in that phone. So it's both ways. The product marketers are trying to push through the sales by packaging and displaying their products in very convenient ways. And now the youth have not been trained on how to take a step back and ask themselves, do I need this product now? Is there a need? Can I do without this product? So those are now we are in a catch-22. Yes.
What are the effects of impulse borrowing on your finances?
Wow. First of all, it gives you a dent you are not ready for. Because remember, like we said earlier, anything you borrow, you must repay. The quick fix, instant impulse borrowing, usually require repayments that are not organized. And so these repayments start taking a toll on you. So you start experiencing that you must pay a certain amount of money at a certain time, which you are not ready for it. The other thing that happens to you when you impulse borrow and it has not been organized is that you're likely to lose collateral. I think we have been listening to stories of people losing their assets because they quickly picked a loan without thinking through the process. And not everybody in the market will listen to you. You need to be able to be with a financier who listens and understands your situation, and so is able to create repayments that are within your debt to income ratio. So when you impulse, it doesn't consider that. The other thing that we are seeing, and we keep talking about it, is our mental wellness. You get to stress, anxiety, and so eventually you become really disrupted in such a manner that you're unable to do your core obligations and your core duties. So we found that this is very, very it's rampant right now, and we need to ensure that people are well. So general wellness actually is impaired because of this impulse borrowing. Yes.
And when you look at the regulations that we have, regulations that govern the credit markets, are they sufficient, to help in dealing with issues of impulse borrowing?
Currently, yes. Because the micro lenders who onboarded the new regulations, there's a lot of thoroughness in terms of product quality, management quality, and the entire spectrum of micro lending. It's just like the management now is just like in the banking industry, and therefore the issue of predatory lending has been knocked out. The issue of shaming has been resolved. The issue of inconsistency or lack of the physical interaction of customers is also being in the pipeline being resolved, so that whenever someone is borrowing, they process through the borrowing process, so that they actually know the purpose and the use and the consequences of the borrowing. Because initially it was very easy to borrow, especially on the mobile phone. You'd borrow and the funds are available anytime, day and night. Even when you're in a restaurant or club, if you find the bill you have is not the money you have is not sufficient, you just borrow and pay for drinks. Then the following day you wonder why maybe a micro lender is calling you to pay up, but in the real sense you put your password and you borrowed. So those are the things that the new regulations are trying to streamline, so that there's a lot of order in that segment. Yes.
And Anastacia, you were also talking about, this is Kariuki Mashari who was talking about, how brandings and marketing agencies are really forcing people to embark on impulse buying through packaging, through coercive messages, and so that. Is there any way we can deal with this?
I think everybody has their part to play, and as long as you encourage people to buy your product, explaining to them exactly what this product actually entails, then you're doing it right in your space. So if everybody would do it right in their space, let the consumer know what is it that your product is doing for them. What are the consequences? What are the pros of borrowing this? What are the cons? Then we in the financial industry, we have a bigger role to play to ensure financial literacy happens, because there is need to access these products. So we cannot say that they should not advertise them, but we must keep encouraging our customers to be able to understand the need for borrowing. Can you afford it? And we keep speaking, not just dishing out money to customers. It must make sense in what they are doing. So I think the onus is heavier on the financial institutions to ensure that prudently you're speaking to customers, you're telling them what they're supposed to do, and you're also finding out when they come to borrow, is this necessary at this point, and how can they pay? How can they be able to pay? Finally, it's also important that even as you're selling any product, and as we're doing, commerce in school, in churches, anywhere, I think all of us need to come together and shun this peer pressure to be able to get to a certain point before. I think if we can be able to bring up the young generation to know that their worth, what they are known for, is not necessarily in material things, it would ensure that then their borrowing is purposeful. And so impulse borrowing will either reduce or will ensure that people borrow towards particular needs.
What is the role of collaboration, between policymakers, lenders, and the public in ensuring that we deal with this trend of impulse borrowing?
We all must come together. I think there is no two ways about it. We all must come together. We must ensure that we are following the laid down policies, and that is not discussed. That we must ensure we follow policy to the letter. We must ensure that what we are offering is actually something that is beneficial to the people. We believe in Springboard that we are actually educating a nation. Whatever we are funding you to do, we are funding you to grow this nation, to bring this nation and make it better. So if we can all collaborate, we can all find a way that we are able to speak to the people, teach them, remind them, and at the points of every interaction we have with a customer, we are discussing necessity, we are discussing purpose, we are discussing your capacity to be able to pay this loan, we are discussing the tenor, we are discussing so much. Let there be talking, and that's why I'm an advocate for relationship lending. Lending must be relational so that we can be able to know different people and their different needs.
Wachira, what is the role of collaboration between the lenders, the public, and the government?
Well, the role is key, and it's something that you cannot twist away. And what I've seen the regulator doing is also good for the borrowers and the general public, because these days they're also insisting that you ensure that whatever any charge rather, fees, must be clearly displayed either in your offices or the customer must sign. So as a lender, you cannot now think of a charge or a fee or a cost, then you push it to the customer, which is something very good, because from the onset, the borrower knows they have engaged into this kind of contract. These are the terms, and these are my roles, and these are my limits. And equally, the lender, these are the limits, these are the responsibilities, and this is the far the lender can charge me, which is a very good aspect, because it's just like the products are consumption products. have their ingredients displayed on the packaging, so that you know this mineral water has this kind of minerals. If there is a mineral that you wanted in that product, then even if you take it, you will not get it.
Very good. You know, even as we come to the end of this conversation, I mean, I know out there are people who are dealing with challenges of decisions they made on impulse buying, and now they are stuck somehow. How would you guide them?
The first thing is to acknowledge where you are. Please get in touch with a trustworthy financial advisor. We always have options of debt consolidation. We have options of debt management, and we have options to actually help you grow your business. So I would encourage anybody struggling with debt, because it is a big thing, and businesses are collapsing because of the struggle of debt. And so please speak to a financial advisor. The same way we say if symptoms persist, see a doctor. Please come and see a financial advisor, so that you can be able to be planned for, including your business cycle, including your personal expenditure. Do not worry to ask somebody, I earn X amount of money, I really don't know how to allocate what to rent, to allocate what to food. Please feel free to speak to a financial advisor. They can guide you, consolidate your debt, and ensure that the repayment is now something that you can be able to be debited every end of the month, or depending on your loan, on your cycle of income.
Very good. What about you? What's your advice to people who are battling with this issue of impulse buying? They engaged in it, now they are facing financial ruins. How do you help them?
The first thing is to accept that you are in a financial quagmire. Then engage your financer or your bank or your circle, and ask them, request them to either repackage the facility for you, restructure the facility, and do all those proposals that my sister has given, so that the end result is that you'll be able to seamlessly go through that challenge without much pain.
Very good.
Yeah.
Anything else?
No, let's talk, because we need to be a talking nation. It reduces stress, and people need to be well. So let's talk to each other.
Let's talk to each other. Well, there you have it. In case you're going through the challenge of impulse borrowing, or maybe you got into it unknowingly and now you're right deep in it, then the best option is you talk to financial experts. They'll help you and they'll get you out of it. Don't suffer alone, because there are people out there who will help you with advice, and you know, with time you get out of that financial mess. Impulse buying is not a good decision. You must avoid it by all means. This is the kind of conversation that we have here on BizCheck. The first hour is gone. The next hour is coming back, and we are looking at climate change and the role of young people. The first hour we were looking at impulse buying and the impact and the effect of impulse buying, and how to inculcate a culture of financial discipline at the individual level and even at the business level. O'Brien Kimani is my name. A short break is well deserved, and thereafter we are back with the second hour. Stay right here.